Hi everyone, my name is Junjie, Head of the Investor Relations team at Azalea. A very warm welcome to Astrea Investor Day 2026. Every year, we take the opportunity at Astrea Investor Day to connect with our bond investors on the Astrea platform and to share more about private equity, or PE for short. We'll start today's agenda with a quick overview on Azalea and share some market updates. For this year's Astrea Investor Day, we have also prepared a special segment to help you understand what are private equity secondary investments, how the secondaries market look like now, the role it plays in Astrea portfolios, and ultimately, what does it mean to you as investors. We will then review the individual Astrea performances for the past year. And finally, we will end our Astrea Investor Day with a Q&A session. You may submit questions for the Q&A via the Q&A button at the bottom of the Zoom window. To introduce myself again, I am Junjie and I head up the Investor Relations team at Azalea. I joined Azalea in 2015, and over the years, I've been deeply involved in fundraising, investor engagements, and driving investor education across both the Astrea and Altrum platforms. With me today is Justin Kay, Managing Director of the Investments team at Azalea. Justin joined Azalea in 2016 and has spearheaded the continued evolution of the Astrea platform. He also leads investments, strategy, and product development for Azalea. Lastly, for the Q&A segment, we will be joined by Mr. Chew Eun Yao, Chief Executive Officer and Chief Investment Officer, and we look forward to engaging with you during the session. Our agenda today focuses on recent updates on the Astrea platform. If you would like to know more about Azalea and how the Astrea bonds actually work, please visit the Azalea website, where we have made available past Astrea Investor Day presentations, explainer videos, and primers on these topics. You may find these resources in the Investor Education section as well, as shown here on this slide, and also within the respective Astrea pages. Before we start, kindly note that all information shared in this session is intended for your information only and is not an offer, invitation, or recommendation to purchase, hold, or sell any securities. If you would like to receive any investment advice or recommendation, please do speak with a qualified financial advisor. Let me start with a quick overview and update on Azalea. Azalea was established in 2015 with a clear mission, which is to broaden investor access to private equity. And this includes individuals. Since our last Astrea Investor Day, Azalea has continued to grow steadily. Today, Azalea manages approximately $14 billion of assets, and our private equity products have gone out to a broad investor base of more than 80,000 individual investors and 200 institutional investors across our Astrea and Altrum platforms. And our team has grown to more than 70 in the past year. We have added bench strength across various functions to support the continued growth of our product suite and assets under management. Azalea benefits from being part of the Temasek and Severa ecosystem. We are able to leverage on Temasek's extensive networks to access high-quality fund managers and benefit from extended due diligence capabilities and preferential terms. Through our parent company Severa, Azalea is able to drive global scale and efficiencies with resources. With this blue-chip heritage, we currently manage various platforms to achieve our mission to broaden access to private markets. Firstly, through the Astrea platform, institutions and individuals, including retail investors, are able to gain exposure to PE funds via the Astrea PE bonds, which are the first listed PE bonds in Singapore. The bonds incorporate multiple structural safeguards to mitigate risks of investing in PE, with several design features to make them more affordable, more easily tradable, and with certainty in coupon and principal repayments. Next, the Altrum Funds platform offers access to private equity funds across a broad range of investment strategies, providing investors with the opportunity to co-invest alongside Azalea in high-quality managers and companies globally. The Altrum fund offerings are only available to institutional investors and accredited investors. Last but not least, we have the STEP by Azalea digital platform. STEP is a digital investment platform which connects accredited individual investors to institutional-grade private market opportunities. These have historically included products from our Astrea and Altrum programs and our partner fund managers. To learn more about how each of our products and platforms support our mission to broaden access to private markets, please visit our website at azalea.com.sg. Now, let me share some key milestones that we have accomplished in the last year across our various platforms. On the Astrea platform, in August of 2025, we successfully launched Astrea 9 with the largest offering to date of $780 million of bonds. For retail investors in Singapore, we issued the largest offering to date of 380 million Sing dollars and $50 million, representing a 37% increase in size from Astrea 8. We saw strong demand from investors, with the bonds being 3.5 times subscribed across the A1, A2 bonds in the public offer. In terms of existing issuances, all Astrea bonds have continued to meet their bond obligations, even through challenging market conditions. This is a strong testament to the robust credit quality of the Astrea transactions and the resilience of the underlying portfolios. We are also pleased to share that the Astrea 6 Class A bonds are fully reserved and are on track to be fully redeemed in March of this year. On the Altrum platform, our flagship Astrea PE Fund 3 garnered strong market interest, and we are on track to hold final close for the fund in the first half of this year. This fund is designed to provide investors, including accredited individual investors, a foundation to build core PE exposure and a self-sustaining PE portfolio. Kindly note that the offerings on the Altrum platform are only available to institutional investors and accredited investors. As we continue our journey to broaden access to private markets through the Astrea, Altrum, and STEP platforms, we are also keeping a close eye on developments around the world and are pleased to see similar intent to improve investors' ability to participate in the asset class. Globally, regulators, including those in the US, EU, and here in Singapore, are taking meaningful steps to encourage greater access to private market investments. These moves strongly align with our mission of making private equity more accessible, and they reinforce our commitment to continue innovating and bringing new PE investment products and platforms for you. Next, I'll be handing the time over to Justin, where he will be providing updates on the market.
Thank you, Junjie. Hello everyone, I'm Justin and I'm a Managing Director in the investments team. Over the past year, markets have had to contend with elevated political noise, particularly following President Trump's return to office. We continue to see headline-driven volatility, whether from trade policy, geopolitics, or fiscal discussions. However, what has changed is how markets respond. Initial reactions tend to be sharp but short-lived, with risk assets recovering relatively quickly. Importantly, capital markets remain open and transactions continue to get done. Overall, investors appear to be adapting to the environment, pricing in volatility rather than stepping away from risk altogether. Turning to the growth outlook, estimates suggest that global economic growth remains relatively stable. After growing around 3.2% in 2025, forecasts show that growth is expected to moderate slightly to 2.9% in 2026, before picking up again in 2027. This resilience is notable given still relatively elevated interest rates and ongoing geopolitical uncertainty. Growth continues to be supported by services activity, technology investment, and ongoing fiscal support in major economies. Overall, the outlook points to a stable rather than overheating or recessionary global growth environment. While inflation has moderated significantly from its 2022 peak, progress has become increasingly uneven across regions. In the euro area, inflation is expected to remain close to central bank targets through to the end of 2026. In contrast, inflation in the United States is expected to remain somewhat higher at just under 3%. This divergence largely reflects differences in domestic demand conditions and services inflation. As a result, inflation is no longer a single global story, but one that varies meaningfully by geography. Despite inflation remaining above target in the US, current market expectations point to around 2 rate cuts or 50 basis points over the course of 2026. This reflects the view that policy is still relatively restrictive and that central banks are balancing inflation control with the need to support economic growth. In the euro area, policy rates are expected by markets to remain broadly stable, reflecting comparatively weaker growth and lower inflation pressures. As a result, market pricing suggests that policy rates across major economies may gradually move closer together by the end of 2026. Overall, this expected direction of rates is generally seen as supportive for capital markets, though outcomes will remain data dependent. Lastly, we are starting to see early signs of recovery in the private equity exit environment. Since 2023, both exit volumes and exit values have been trending upwards. While activity remains below the peak seen in 2021, the market is rebounding nicely again. Stabilizing interest rates, improved price discovery, and stronger public markets have all supported this recovery. A healthier exit environment is important for distributions, portfolio rebalancing, and capital recycling across the PE ecosystem. Next, as part of our commitment towards broadening access in private equity, we would like to explore more about the secondaries market, which is a rapidly growing part of the PE market and also a key strategy in the Astrea program. Now, for those of you who may be less familiar, we will spend some time talking about private equity, or PE, the underlying asset class of the Astrea bonds. Kindly note that this segment is for informational and educational purposes only. Private equity is a type of asset class that involves investments into private companies, which are managed by professional managers also known as general partners or GPs. These GPs raise money from investors who are commonly known as limited partners or LPs for their funds and seek to generate returns for their LPs by creating value through operational improvements before exiting from these investments through selling to other GPs or strategics or through an IPO. There are various strategies such as buyout, growth equity, venture capital, and private debt. Of the various PE fund strategies, the buyout and growth equity strategies have historically outperformed venture capital and private debt, as illustrated in this chart, producing median returns of 16% and 14% per annum respectively. For the Astrea program, we are focused primarily on buyout and growth strategies. Buyout funds focus on purchasing controlling stakes in companies to make operational improvements, while funds that employ growth equity strategies invest in fast-growing companies. Some examples of PE companies are listed on this slide, which I'm sure some of you may recognize. Taking a step back, we've seen tremendous growth and maturation of the private equity market as a whole. However, what we've also seen in recent years is the uptick in the amount of unrealized value held in PE funds. As you can see on this slide, since 2020, the amount in terms of dollar value of PE-owned companies has spiked. And as at 2024, buyout funds globally held approximately 29,000 companies, which represents around $3.6 trillion in unrealized value. This huge overhang of PE-owned companies has led to a decline in the rate of distribution as seen in the chart on the left. Despite the recovering exit environment, as mentioned, the amount of value that buyout funds have distributed back to LPs as a percentage of their beginning unrealized value has remained at mid-teens since 2022, a notably depressed level versus pre-2021 of around 20% and above. To put it simply, GPs are returning cash back slower to their LPs, and increasing amounts of value remains stuck in PE funds as traditional exit routes remain quite limited. However, what this has led to is an acceleration in the growth of the PE secondary market. From 2022 onwards, secondary transaction volume has seen a jump in growth rate as LPs and GPs have become more creative in generating liquidity for investors. To properly understand why the secondary market has become so attractive, a good starting point is first to understand the two main types of secondary deals. The first is the LP-led secondary, which has historically been the main contributor to the secondary market. These are initiated by LPs who may choose to sell one or more of their PE fund stakes. Listed on this slide are some recent examples of high-profile LP-led secondary sales. So, why is it important in the context of Astrea? Because Astrea is fundamentally an LP-led transaction. Each Astrea portfolio is essentially an LP-led secondary portfolio which we package into the product that most of you are familiar with today. Since inception, the Astrea program has acquired over 158 funds, managed by more than 60 GPs, comprising US $10 billion worth of NAV. To illustrate the difference between a primary investment and an LP-led secondary, it's easiest to look at it through a typical cash flow curve of a PE fund. For primary investments, LPs will have to commit from day one of the fund, when the fund has no assets within its portfolio. LPs will need to fund the investments that the GP makes through the investment period of about 5 years, and see limited distributions during this period. This means that the first few years of a PE fund are typically cash flow negative for the LPs. They pay out more than they receive. Distributions only really start to return to LPs in the second half of the fund's life after the investment period is over. However, for an LP-led secondary investor, they will typically acquire a portfolio where most of the funding has already been completed, with the underlying assets soon to be exited, therefore entering the investments in the cash-generating phase of the fund's life. This is why LP-leds form the foundation of the Astrea program. The mature portfolios that we acquire generate cash flow, which allows us to pay our bond obligations. Another key strength of the LP-led transactions is the underlying diversification of these multi-fund portfolios. In one buyout fund, you may find up to 30 underlying assets. The Astrea portfolio are even more diversified, with more than 30 funds in each Astrea transaction. This broad diversification provides protection against downside. Even the largest companies typically represent only a small fraction of the overall portfolio value. This benefit is illustrated in the chart on this slide, where only 2% of secondary funds, which are similar in nature to the Astrea portfolios, have returned less than 1 times, implying a low risk of loss. The next secondary deal type is the GP-led secondary. These are transactions where GPs sell quality assets from their existing funds into new funds, known as continuation vehicles or CVs. This gives the LPs the option to generate liquidity from the assets. Some of the largest GP-leds in the past year involve assets within the Astrea portfolios, which we will cover more later. The rise in the GP-leds has been a result of the weaker distribution environment, as LPs apply pressure on GPs to return cash. GPs have sought to use GP-led secondaries to retain their best assets, while also generating liquidities for LPs. As a result, the GP-led volume has grown tremendously over recent years. It now represents close to 20% of PE exits globally, more than 4 times of that seen in 2020. And with 3 out of 4 of the largest GPs actively using GP-leds as an exit avenue. GP-led secondaries have also helped our Astrea portfolios generate liquidity in the midst of the muted IPO and M&A environment. Across 2025, GP-led transactions have led to exits across Astrea's 5 to 8. These are multi-billion-dollar CV transactions across sectors such as enterprise software, via Cloud Software Group, Education via Globe Educate, and Industrials via Astrea. In summary, the three main benefits of secondaries are the following. Firstly, greater asset visibility with reduced blind pool risk. Secondly, built-in broad diversification, which reduces concentration risk. Thirdly, a shorter duration exposure through acquiring mature assets which are cash flow generative. Now, let me hand over the time back to Junjie, who will give a performance update on the Astrea bonds.
Thank you, Justin. Now, let me share more about the performances of the various Astreas. As a recap, Astrea 3, 4, and 5 have been fully redeemed already, and the current outstanding issuances are Astrea 6 to 9. The Astrea 6 bonds were issued in March of 2021, and the Class A bonds have been fully reserved as of March of 2025 and are on track to be fully redeemed as per schedule next month in March 2026, which is 5 years after issuance. The Class B principal will start to be repaid, in other words, to be amortized, in the same distribution period. The Astrea 6 portfolio has enjoyed strong cash distributions since issuance, totaling over $1.3 billion, which represents approximately 92% of the starting portfolio net asset value, or NAV for short. At the same time, the portfolio also experienced fair value gains of $441 million. The Astrea 6 bonds achieved several rating upgrades over its term. Most recently, in November 2025, the Astrea 6 Class B bonds were upgraded from A to A+ by Fitch. Currently, all tranches are rated A+ and above. Next, Astrea 7 was issued in May of 2022, and to date, it has enjoyed strong cash distributions of more than $1 billion, representing around 53% of the starting portfolio NAV. As of the last distribution date, the reserves have been on track and accumulated to around 75% of Class A bond size, while the loan-to-value ratio, or LTV, sits comfortably at 27.3%, below the 50% maximum LTV ratio. The Astrea 7 bond tranches have investment-grade ratings, and in November of last year, the Astrea 7 Class A2 bonds have been upgraded from A to A+, reflecting the improvement in the bond's LTV ratio. Issued in July of 2024, the Astrea 8 portfolio has generated cash distributions of over $360 million, or about 25% of the starting portfolio NAV, which has been more than enough to satisfy bond obligations to date. As of the last distribution date, the reserve amount is around 40% of Class A1 bond size, and the LTV ratio remains healthy at 34.5%, below the 50% maximum LTV ratio. The Astrea 8 bonds are rated investment grade. Astrea 9 is the latest addition to the Astrea platform and marked milestone, being the largest retail offering of the Astrea platform. Apart from the Class A1 Sing Dollar denominated bonds and the Class A2 US dollar denominated bonds, Astrea 9 also has a Class B paid in kind, or PIK tranche. The Class B PIK bonds offer institutional and accredited investors an opportunity to invest in a more junior tranche with a higher risk profile and returns that's closer to that of a conventional PE fund. This is part of Azalea's strategy to continuously innovate and develop the Astrea platform. Issued in August of 2025, Astrea 9 issued its first distribution earlier this month. The portfolio has generated healthy cash distributions of $188 million, or about 12% of the starting portfolio NAV, which has been more than enough to satisfy bond obligations to date. Like the other Astreas, all Astrea 9 bond tranches have investment-grade ratings. We remain heartened by the stability of the Astrea PE bond series, which has continued to demonstrate resilience through multiple market cycles. As you can see on this slide, the multiple credit rating upgrades across the Astrea transactions underscore the strong credit quality of the bonds, even as geopolitical uncertainty persists and market volatility continues. The Astrea portfolios have continued to generate healthy and consistent cash flows, supporting the progressive de-risking of each transaction through regular cash reserves and cash flow. I would like to close off today's presentation by highlighting the key takeaways from today's session. We started with a market review where we noted stable economic growth in 2025 and further moderation of inflation rates downwards. Next, we saw how despite recurring political headlines and volatility, markets remain open and resilient, adapting to Trump volatility and sustaining trade flows. We also explored secondaries as a PE strategy and how it forms a foundation for the Astrea program. These secondaries allow the Astrea bonds to achieve diversification and liquidity benefits similar to secondary fund of funds, strengthening portfolio resilience and supporting regular cash flows. Finally, we are also pleased that the reserves for the various Astreas continue to stay on track and all Astreas continue to generate sufficient cash flows to fulfill bond obligations. Thank you.